Hello, everyone. Welcome to Smart Investing. My name is Albert. I'm the owner of the channel for Smart Investing. And today's video, I have for you guys 4 stocks from the automobiles and parts industry. In total, I have about 100 stocks to go over. So as the days go by, the weeks go by, it's going to be about 25 videos, more or less. So when we go over these videos, again, I'm going to show you some fundamentals, technicals, and quants. So let's just begin. I'm going to start off with the first stock that I have. Ticker symbol NWTNW. And again, the industry that we're going over is automobiles and auto parts. I went over this industry years prior. So if you do want to look at that industry, I could link that up as well. And again, a lot of these companies a few years ago, obviously their evaluations were lower. So again, I'm going to expect a lot of technicals just going straight up. We're at market highs ever since last year. Even entering this new year for 2024, everything has just been going up. So a lot of these evaluations, honestly, they're not going to make sense. They're going to be sky high with these numbers. That's what I'm expecting for a lot of these companies, especially in the tech industry. So for this industry, again, I'm gonna expect a lot of crazy looking numbers. So looking at this first page, I see here barely any numbers here. I have nothing here, nothing here. I'm missing my PEs. It's hard to really evaluate this company. I have negative earnings here, so this stock is only at 9 cents. Volume is like very, very low. There's not much to work with. We have market cap, it's not even showing. 52-week high and 52-week low. We have a 3 cents of a low and a 39 cents of high. So I really don't know how to evaluate this. Just to get like a guideline or just get like, a baseline as to more or less how the company is running just through basic numbers. So looking at the chart, jumping into the technicals, we have a 5-year that looks kind of flat to me, very flat. You see here these lines touching, so around 8 cents. Then we have a high of about 43. So there's not much to look at. I mean, if you're looking at it, not even $1 at its highest, and that was back in 2021. And again, this is a 5-year chart. I mean, it's just a horrible looking chart. You're not gonna expect much from this. So far, I don't even like it. It looks flat. Look at all these flat lines here. You can see there's no activity there. These jumps usually mean that there's volatility. There's movement. People are active. People are buying and selling the stock. But with these flat lines here, that looks bad. That looks really, really bad. It's not very interesting to investors or traders at all. Not even institutions. So I kind of fall in the middle of that. But again, you guys know that if I had to choose a side, I'm already on the Main Street side. So looking at the 5-day, I mean, you're going to see some crazy numbers. I mean, look at this at 52% gain for, and I took this picture a few days ago for my list. So this stock today at 52%, I mean, that percentage looks nice, but for that price, it's not even worth it. I'm sure many of you agree. So moving on from the technicals, I'm not even going to look at the time in sales. It's not even relevant at this point. I really don't look at that unless trading's going on. Again, I have other sources when it comes to that, and I don't like showing that. That's TMI. So looking at the analysis, let's look at some quants. I don't even have a quant rating, so that's already out of the window. Let's scroll down to, I have nothing for technical analysis, so that sucks. This is telling me that this company is not even worth looking at, worth mentioning, or not even worth evaluating. So with the analysis, I'm sure nobody has even rated this. So reading about the company NWTN, it says it's a green technology company. It's engaged in passenger mobility and green energy solutions. Core technology includes modular, pure electric platforms, battery packaging and management technology, digital onboard connectivity system. I'm just gonna kind of skim through this. They are in Abu Dhabi, UAE, as you can see there. So we have locations. That's good. Let me move my camera here to the corner. They are out east. You can see Africa, China, Asian, and European countries as well. They're looking for clean energy, growth, and development. I like what I hear, but I don't like what I see based off the numbers. So I don't know if this is accurate. Company was founded in 2022 of March. Not really a good date to be released. Aside from that, we have to look at some numbers. So this brings me to the financials. Hopefully we can see financials. Let's see what we have here. If they have any annual numbers. Let me close this app again and then open it up. So I'm sorry for the delay. Sorry for the delay. Let's see here. So let's do this again. These are the 4 companies that I'm going over. So again, I have ticker symbol NWTNW, ticker symbol REE. It's the one at the bottom. That's going to be the next one. Then we have ticker symbol LEV-WSA, also known as Line Electric Company. And then ticker symbol SYPR, Cypress Solution. So those are the 4 stocks that we're going to go over. So again, let's look at the annual. There it is. So I have nothing for 2023. And it's only showing me the latest of 2022. You can see these big drops. Then we have the ROE. Negative 36%. Big drops. Nothing for net margins. These numbers look pretty bad. The debt doesn't look too bad. But obviously the evaluations change week to week, you know. So net income looks pretty bad. I'm not getting enough numbers to evaluate this company. Look at this in 2020. Like, their debt was insane. Their debt was like over 1,000% compared to the assets. I mean, these are just funky numbers. I really don't have much to give you because I'm not getting much. I don't even have a market cap. I can't even evaluate this on the market cap. So, by the looks of it, I'm going to say don't even add this to the watch list. Share price is not even going to go more than 43 cents. And if it does, it'll take a few months to do that. So, we're going to move on to the next one. Next one that we have. So, again, for this stock, do not add to the watch list. Again, I'm not making buy or sell recommendations. All I can say is do not add this to your watch list. Horrible company. Next one up, we're going to try to evaluate ticker symbol REE, also known as RE Automotive. We have here, okay, now we have some numbers here for this one. We have this stock at $4.02. a high of today's high of a 4.1 and then $4 of the low. Volume is pretty low at about 5,000. Market cap is only at about 54 million. So at 54 million, that's a stock that Wall Street does not like. Very, very low market cap company. 52-week high and low. That's a difference of about 11 bucks. At 13 bucks, that's still not enticing for investors. Not something to look at when it comes to even growth or trading, or it's not appealing to make money on. So we're already at $4, and then even if it reaches $13, it would have to break above those 52-week highs. If I was interested in the stock, it would have to break above 14 for me to be interested. It would be a day trade. This is not a stock so far looking at these numbers that I would be enticed to hold on to for long term. So PE, I have nothing for the PE. Earnings, I have -10. I mean, these look like horrible numbers just to have a baseline as to what I'm going to be looking at. So again, bad numbers. We're going to look at the 5-year trend. You see this went from April in 2022. Then you see here, just kind of dropped down like that. So you see this little point here. That right there was a turning point. Because if it went up, it could have reached back high. But it didn't do that. And then it just pretty much went back down that way. And it took a drastic effect. So with that, this was actually the turning point right here. That big drop. The really big turning point. And then also for confirmation. For confirmation, you see this drop right here. That was your confirmation as to this stock is for sure that it's over. Very, very crazy looking numbers. I mean, we went from like 430 and then to a low of 129, and then from there it just, that confirmation went down to like high 50s, low 60s, more or less. So again, from there, that's a really big drop. That is a very big drop. I don't know if this stock like this can come back. Who knows? The chart looks pretty bad. It just looks flatlined. Who knows if it might come back. They had a split in 2023. Reverse split. 1 for 30. And you can clearly see some movement within this past year. Going from about $4 all the way to like $7. That's a start. But you can see here within, even that first month, it had some decent movement. And then it just dropped right back down. And then going into 2024, again, this is the 1-year chart. Then you have here, it's starting to kind of form that trend again to be bullish. And then it kind of just rejected that, in about February. You can see it rejected that high when it reached back in November. It kind of reached that high again. And then, you have that double top. And then you see it just kind of reversed as the months went by. And it just went down again. So, it needs to break above those highs. Basically. So we have that number of about $7, and then it's still in that low end of the range of about 3.8. So we have a low of about, I don't know, could round that off to 4 and a high of 7. So we're looking at that $3 range, that $3 range there. So it doesn't look like it's going to break out anytime soon. Has a lot to go to reach the $7 mark. Other than that, it doesn't look good. It just doesn't look good, even with the reverse splits. Who knows? Maybe one day this stock might come up again and be popular, and who knows? It's just a matter of timing and what's hot or not. So, moving to the financials, let's see here. Sorry. Analyst ratings. It says 100% buy. So, we have 4 analysts. So all 4 said this was a buy. I totally disagree. I need to see the fundamentals first. And again, I don't have any clear numbers here. The more numbers that I have, the better decision I can make. So again, with those earnings, I'm just not seeing it. And then the 52-week high and low, I saw that range of about 7, but the 52-week high was about 14. So that doesn't even look too good. So with the financials we have here, we're going to look at the accounting practices and we're going to look at some numbers here. We have these earnings estimates that they try to go up and then they just missed. And these evaluations, again, they try to do these estimates, try to get them higher and higher and higher out of the negatives. And then you can see they're reported on that miss and then they just dropped. We have the ROA. Let's look at the annual numbers. These numbers are still negative. Negative. Earnings look not even getting better. Net margins look beat up. Debt is pretty typical, whether it goes up or down. You know, these numbers and indicators, they're bad. They're bad. I don't see anything good coming from this stock. And again, you know, those highs and lows, you know. So, income statement, balance sheet needs a lot of work. Cash flow, do they have cash flow issues? We have, it's the negative 50, so 50 and 23. So that's 27. So negative 27 million. Horrible stock. They have negative 27 million in cash flow. So there you go. Do not add this stock to your watch list. Next company that we are going over, ticker symbol LEV-WSA, also known as Line Electric. We're going to look at the price, 17 cents. Volume is at 14,000. Market cap, it's not showing me anything. 52-week high, 52-week low. A low of 14 cents, high of 87. This is not even $1, you guys. Not even $1 of a difference. Right away, that tells me trash. I don't care what the market cap is. With that price, and then looking at the earnings, volume as well, with these 3 right here, pretty much a tic-tac-toe if you want to laugh at it, but those 3 numbers, major indicators, just telling me this stock is pretty worthless, but we're going to go over it anyway because that's promised. That's what I do. 5-year chart. We have here from, it's supposed to be a 5-year chart, but it's only giving me the start of 2023 back in February, which was worth at about $1.16. We have here this drop. Not really much movement for the confirmation, but you can see it kind of flatlined and then it just kind of slowly went down as the months went by. And pretty much it's on a decline. Again, looking at the price, it wouldn't even matter. Even if this price wasn't here, that wouldn't even matter. Whoops, sorry about that line. So you can see it just kind of went flat and then it just, slowly, gradually went down on a decline. I don't like what I see on the chart. It doesn't look good. I'm not even going to mention a range because, again, this range is not even $1. Literally, this stock needs to go above $1. I'm surprised this stock hasn't even been delisted. on a serious note. So moving on to the analysis for any quants, technicals is not showing me anything. Another horrible stock. Sorry to say, but it's not giving me any good numbers, anything at all. Return on assets was negative 13. It's horrible. It's not even getting better. ROE, return on equity for 2023, negative 26%. It looks awful. Earnings per share, negative 0.46. Just another horrible looking stock when it comes to the numbers. Nothing good coming out of this. Nothing good at all. We're just going to skip the next indicators there. Move on to the net income. We have net income at 103.7. It didn't. I mean, it's bouncing around. You see that little bounce? I mean, it looks like it was getting better here, and then all of a sudden, just 2023, it ruined the whole thing for that year. It ruined pretty much everything for the last 4 years, all over again in that 1 year for 2023. So things do not look good for this company. Again, whether management changes this around, I mean, the numbers speak for themselves. I mean, the facts are the facts. So there's not much you can do about it. Balance sheet looks okay. Ever since 2020, they look reasonable. I mean, they were in trouble. And then 2021, 2022, obviously, these numbers look outrageously good. Because, again, balance sheets were inflated because of the Federal Reserve, pumping in money. And, getting these secret bailouts and all this funny money with low interest rates a few years ago. And even though we're in a high interest rate environment, doesn't matter. We're at all-time highs ever since October of last year. Even though the stock market economy, because that's what it really is, the stock market economy looks really good. The real economy looks like crap. So moving on to the cash flow. Hold on here. What did I do here? What's going on? Okay, just double checking. So moving on to the cash flow. Operating. Obviously, I'm going to say no to the stock anyway. But yeah, they're negative cash flow. I don't even want to do the math, to be honest. I don't even want to add that up. But I'll do it anyway, because I'm a nice guy. So we have 110, and then we have the 123. So we have 233, and then the 175. So about negative 60 million in cash flow for this company. Again, some people have different models, like discounted cash flow and a cash flow system and LBO models, and I don't know, to each their own. I know what works. I've been doing this for about 10 years. And again, it's not about how long you've been doing this. It's about how good. And I'm pretty good at what I do. And again, gradually, you should be getting better at what you do. So this stock is trash. My model works. Structure works. Highly accurate. Numbers speak for themselves. My work speaks for itself. And my performance, obviously, it has proven time and time again, year after year, very consistent with my work. So this stock is not even worthy to add to a watch list. So I'm going to say no to this one as well. Last stock that we have, I'm sorry for keeping you guys up. I'm trying to evaluate these companies as best as I can and as fast as I can. Last stock up, ticker symbol SYPR. Looking at this market cap, 43 million. I'm looking at this here. Let me open up this page so we can have a better look and go over some more numbers. Oh, look at this 52-week high and low. Horrible, horrible, horrible. Earnings, horrible. And then we have market cap. Whoops, sorry about that. Market cap at 43 million. Volume needs to go higher than that. I mean, earning 2% on a 1.93 share price, not even $2. It's something, but again, another company that's not even worth it. I'm looking at this chart and the 1 year. Look at this high. It went from. These are big moves. I mean, in May 24 of 2024. Let's look at the last month. This stock looks like it's on a tear. What was that 52-week high? So this is a stock that might be a sleeper. If it breaks above that 52-week high, this stock can definitely be interesting. Looking at the 5-year. Okay. Yes, looking at the 5-year. Well, let's look at the max. I'm sure people are very, very curious. But we don't care about that. That's like from going 20 years back. Latest, we want to look at 10 years a little bit too long. I used to look at the 10-year and I don't have access and availability to that. So I do like the 5-year. It's a bit shorter. And still pretty good long-term period. So if it breaks above, let's say around definitely 2.8. So what is the share price now? Let me scroll up. So we're looking at the range of about the 52-week high of 2.3. That's your first target. Then that will be for the year. Then the second target, after if it breaks 2.3, which is only 40 cents away, you want to look at 2.8 because that was the target for the last 5 years of that breaking point to consider that going into bullish territory. So we have 2.8 as your second target. So I think at 2.3, that's not a number I would jump in at. That's a number where I think I would add it to the watch list because the stock will still be cheap anyway. It'll still be under $3. So if it starts to go above 2.3, and I think I'd get interested in really looking at it every day. Once it reaches around 2.5, then around 2.6, 2.7, that's when I might start considering to maybe jump in. Definitely, if it starts in the 2.8 range, $2.80, that's going to get me interested. That is definitely going to get me interested. That'll be one factor. Obviously, if you're a trader, volume. And then consistency. Not only I want to see volume just for one day, like, I don't know, 500,000 in volume just for one day. I need to see that for a few days. Again, once it reaches that first target 2.3, at around 2.5, if it starts to become the volume around, I don't know, 500K, there's a lot of movement, or either there's volatility, or there's a lot of turnover. Something that has to be a deciding factor, which makes it a lot of movement. A lot of people look at volume, but I look at that and much more than that, which makes me really good at what I do because I'm not going to state more than that, but I look at a lot of key indicators when it comes to trading. I look at it all. But again, that 2.8 range is what's going to make or break it. So even though I see this big move, it got me looking at it, but it still needs work. But if we see big moves like this again, then yeah, this is a stock to definitely pay attention to for day trading. As for the long term, I'm gonna look at this analysis here. Quants, it's not showing me much. Again, the numbers need to look better than this. It needs a lot of work. Out of the four, this is so far better than the other three so far. It said it reached the double bottom, and for the most part, it's giving me a bullish signal. Again, that's the AI for you. That's going in for these recommendations. For the short, medium, and long term is neutral. For short is bullish. Medium, it's bullish. So votes 2-1 voting for bullish using that AI. And then the quants, I mean, there's not much to look at. I kind of disagree with the quants. I can't tell what the value is, the quality. It's just hard to say. But the overall rating for the quant, they gave this a 1 out of a 5-star. So, moving on to the company and the financials, we're going to look at some numbers. I like to use guidelines for the accounting practices. I like to use guidelines. I don't like to use non-guidelines. I feel kind of like in trouble. I don't even know what other word to use. I kind of feel like I'm going against the rules when I'm using non-accounting practices. I just don't work that way. I like to do the right thing. So, looking at these earnings, I mean, look at this. You see this curve and it just drops like a frown. Drops. Remember that. When you see the drops like that, no good. No good. No good. And these aren't large numbers. I mean, that could be worked on. Nothing pretty drastic. It's doable. So, looking at ROA, I want to see the annual numbers. It probably froze, so please bear with me again. And I'll pull that up. So, looking at the sorry, let me move my camera again. So I apologize for that. Looking at the guidelines with accounting practices, and then we have the annual numbers here. We have ROA at negative 1.37, ROE negative 7, earnings per share negative 0.07. Needs to be worked on. They need some earnings bad. And I wouldn't say this has potential, but it might have some potential. It might have some potential. Net margins at negative 1.7. Debt is at 82%. Looking at these numbers, negative 1 mil, 1.6 mil. I'm going to have total revenue at 136 million. Negative 1.6. And we have 136 million. I mean, this stock needs some work. But the technicals are the technicals. Then we have negative 13 million. Yeah, this stock has negative cash flow as well. Purely based on the fact that this has potential for technicals and it's going to take months and months and months. But by the way we're going on the stock market with new highs and everything, this might have potential for technicals. So again, I'm not going to rule this one out. I rarely make this decision, but I'm gonna add this as to be determined. I'm not gonna say add it to the watch list or decline it to not have it onto the watch list, because again, it's gonna take months and months and months, but to be determined for that stock. Just on the pure fact of decent technicals. And I've seen very bad technicals, but who knows if it might have potential. Again, it's always better to be early than to be very. Let me say this again. It's very good to be very early instead of just being on time or just being late to the party. Because when you do your homework like I do, and if you don't, if you follow the right person, get the right information, look for the right information, this is the kind of work that you get once you're in the know. So thank you guys for watching. Again, let me make a disclosure and disclaimer. As of right now, I'm not a financial advisor. I'm not licensed or insured. So again, please consult a financial advisor who is licensed and insured, because they're the ones who are considered professionals. And again, investing in the stock market carries great risk, but also carries great reward. Other than that, do the best you can. Thank you guys for watching. I'll see you guys in the next one.